Okay, once again, I want to welcome my students. Okay, the video is already running. Don't know why my computer. Okay, it went off. Wow. What's wrong? What's wrong? Hold on. Yeah, this is the business combination video. What's happening? Okay, so I think we are live again. We're live again. Let me confirm that the video is live because it looks like it's having some hitches. If you are there, please let me know. Let me know if you are there. Okay, I think it is live. It's live showing. It's showing. Are we there? Can you hear me? Yes, so this is another video, another professional exam question. The solution has not come, but the solution will come later. Like I said, this is business combinations video. The question will be set out now. I'm going to read it. I also give tips on how to answer the question. So I will deactivate my face now. At the end of the video, I will reactivate it. Okay. So we have a question on business combination. Business combination question. Hope we are all there. This is question 2. The first one ratio was question 1. Now we have question 2. On 1st of January 2024, Atlas Holdings PLC acquired 75% of the ordinary shares of Better Manufacturing Limited. Consideration transferred. Atlas agreed to the following: 1. Cash payment 800,000 on acquisition. 2. Share exchange 1 Atlas share for every 3 Better shares acquired. Market value of an Atlas share at acquisition 6 naira. Contingent consideration. Atlas will pay an additional 2 million naira on 31st December 2025 if Better's cumulative profit for 2024-2025 exceeds 5 million naira. Fair value of this contingent consideration at acquisition date 1.2 million. Fair value at 31st December 2024 is estimated at 1.5 million. Share capital and reserves of Beta Limited at acquisition: ordinary share capital 3 million, shares at 1 naira each, 3 million shares at 1 naira each, retained earnings at 1 naira at 1st of January 2024, 4.5 million. Fair value adjustments at acquisition. At acquisition date, 1. Planned carrying amount 4 million. Fair value 5.2 million. Remaining useful life 6 years. Then 2. Inventory fair value exceeds carrying amount by 600,000. Half remained unsold at 31st December 2024. 3. Unrecorded brand intangible fair value 1.8 million. Useful life 6 years. Straight line amortization. Indemnification assets. Prior to acquisition, Beta Limited had an outstanding legal claim. Fair value of contingent liability at acquisition 900,000. The former owners indemnified Atlas for 80% of any settlement. The indemnification asset had fair value equal to the indemnified portion at acquisition at 31st December 2024. The fair value of the liability is 1 million. Non-controlling interest. The fair value of non-controlling interest at acquisition was 3,100,000. Post-acquisition results of Beta Limited. Year ended 31st December 2024. Profit after tax 3.6 million. Dividends paid 900,000 naira. Required. Calculate the goodwill on acquisition of Beta Limited using the fair value method for NCI, clearly showing treatment of share consideration, contingent consideration, and indemnification assets and contingent liabilities. Compute the post-acquisition movement in Beta's net assets attributable to group retained earnings, non-controlling interest. C. Prepare the consolidated retained earnings of Atlas Holdings PLC at 31st December 2024. Extract only. Atlas Holdings PLC retained earnings 4 million. 4. D. From an analyst's perspective, briefly discuss two implications of the presence of contingent consideration and recognition of an indemnification asset for assessing acquisition risk and future impairment of earnings volatility. So, like I said, the first step is to calculate the goodwill on acquisition of Beta Limited. Of course, you use the fair value in calculating the goodwill, knowing that this is acquisition method that you are going to use in the computation. Now, in calculating goodwill, you should know how to treat the consideration transferred, the 800 million, the 8 million. And then also, you will include the share. So this means that they are acquiring it with cash and with a share issue of shares. So you should know that they are going to issue shares. 1 Atlas share for every 3 Beta shares. And they are going to issue it at the price of Atlas shares, which is 6 naira per share. So you should be able to compute how many shares that they will issue based on the number of shares that Beta has. Then you should also consider the contingent consideration when you are calculating the goodwill. ensure that you include it. Now, you are going to include it at the value at the acquisition date. And then, after the acquisition date, at the end of December 2024, the value has changed. So consider the change in value. Of course, you know that that change is no longer a goodwill affair, but an expense. Look at the period of consideration of contingency, 2024 to 2025. You can easily make mistake. So check the period that the contingent consideration run. Then share capital and reserves. Of course, you look at it, it is from here that you're able to get the net asset and how to issue the shares. Look at the fair values and all those things. So it's important. Then the next one is to compute the post-acquisition movement in Beta's net assets. So you can see the plant uplift, the inventory, and you can also recognize the unrecorded branded intangible assets, brand intangible. So these are a little intricacies that you should remember to work with when you start solving the question. In indemnification asset, you can see what the outstanding was, 900,000, and what the liability actually came up to in 2024. And the indemnification asset that was covered by the old owner. So this should be what you should know. The contingent liability at the beginning was 900,000. At the end of 2024, it rose to 1.1 million. So also think of how much was indemnified out of this, and then the difference. Okay, you can also see the non-controlling interest. Look at the NCI was given, and then you also remember the post-acquisition result of Beta Limited at year end 31st December 2024. The profit after tax, look at how much it is, and the dividend that was paid. So you should take note of all these things. Take note of where the contingent consideration is hinged. If the profit exceeds 5 million. So these are little intricacies. Then prepare the consolidated retained earnings of Atlas Holdings. Of course, this will heavily depend on B. If you did not get B correctly, you hardly get C. If you did not get B correctly, it's easy to get 0 in C. So you must compute B very well in order to be able to compute C. Then D is all about how you understand contingent consideration and indemnification assets. Read it very well so that you'll be able to know what effect or the implication it will have when we have a contingent consideration and indemnification asset. So this is what you must have to know. It's very important that you look at it very well so that you understand how all these things work. It's not supposed to be difficult for you if you take your time and go through it. I want you to start solving it, and then we can discuss online while you are solving it at the comment section when you start solving. I'll be able to handle them for you. So I'm going to show another video of the video is going to be on group account. I'll also read out the questions and throw some light on how to solve them. So you start going about them, you start solving them one by one. So meanwhile, I'll say thank you for now, because I'm going to end this video to start another one. In the next 2 minutes, the next video will start running. Thank you.